Good morning, everybody, and welcome to TradeStation for today's morning market briefing on October 12th, 2018. Our presenter today is Sam Seiden of OTA. I'm Don Prado from TradeStation, and in my notebook today, U.S. stock futures are a little bit higher this morning. Actually, a lot higher, but only enough to make a small dent in the sharp losses that we've absorbed over the past couple of days. The market route that saw the S&P 500 index enter its longest slide since 2016 and the gauges in Asia and Europe plunged so far, it's not going to extend at least into a third day. Overnight markets in Asia were boosted by robust China export figures, with the MSCI Asia Pacific Index climbing 1.2%. In Europe, there's no repeat of yesterday's drop, with the stock's 600 index about 0.5% higher. Earlier, S&P 500 futures are pointing to the recovery moving over to the U.S. when the markets open. Earnings season officially kicks off this morning. We talked about this the other day in the Market Action webinar with David Russell. The quarterly earnings from Citigroup, JP Morgan, Chase, and Wells Fargo and PNC Financial have all been announced. JP Morgan Chase's third quarter earnings topped the Wall Street estimates. So some of those things will be absorbed into Sam's presentation today. Let's just move on to the disclaimers and disclosures, our housekeeping. Our presentation here is for educational purposes only. All the symbols, all the trading ideas, and everything we discuss are for demonstration purposes. They are not recommendations. This presentation is not an offer or a solicitation of any kind in any jurisdiction where TradeStation is not authorized to do business. Remember that active trading is not suitable for everyone, and options trading carries a high degree of risk. I've included those disclaimers and disclosure information in the chat panel. You can scroll up to see those at your convenience. Our presenter today, as always on Fridays, is Sam Seiden, the Chief Trading Strategist at Online Trading Academy. Sam brings decades of experience in equities, Forex options, and futures trading. He's been involved in the markets since the 1990s, both on and off the floor of the Chicago Mercantile Exchange. I want to turn things over to Sam right now so that we can get started with our morning briefing. Thanks very much, everyone, for coming to TradeStation today.
Good morning, everyone. You should be able to hear okay. Sound should be fine. Yep, hey Avi, great to see you. All right, let me just get the charts up here. And should be just a second. Looks like they're loading. And still loading. Let's see here. All right, let me try this again. Sorry about that. It says it's loading. Yeah, this is working perfect last week. By the way, I did get a new computer. So I haven't set it up yet, though. Just got it yesterday, but this is not loading. Sound should be fine, though. While that's loading, if you can hear me okay, All right, one more time. Let's see here. Yeah, we had this issue all fixed. Anyway, I have a supercomputer, and I got it last night, so I don't have it set up, unfortunately. So that we should be more than fine going forward. But yeah, why don't we just quickly go over. Um, yeah, I'd love to share screens with you, but let me go over this for a few minutes and let's see how this works out. Right, I've got a lot of markets to go over. First of all, yeah, I got it's a pretty neat high-powered gaming computer. Not that I'm into gaming myself, but when I saw the graphics card and some of the internal pieces, it was actually better than any other computer I could find. So it's pretty powerful. Anyway, I'll be on that going forward, and we've had a really good week navigating these markets. So let me kind of help you understand where we're at now with regard to supply and demand. Um, one position that I want to make sure we go over that we're in is um, entered Amazon yesterday. So the trade's going to be, if you look to enter it today, it'll be certainly different. But if prices do come back down, I just want to make sure you have it. We were just doing a straight premium play, right? With volatility so high yesterday, Amazon down into a daily demand zone. We just did a straight at the money, selling at the money puts with price in the demand zone. I think we're Amazon's bouncing up today, so and risking down to just below the daily demand zone. So if the market does come back down, that might be a play that you want to consider. Um, when you look at as I've kind of mentioned a bunch of times, ultimately the markets appear to be headed towards the February lows, and you really don't have a whole lot of demand to stop that. Of course, not suggesting that's going to happen overnight or anything, but that's what the larger time frames are telling us. We're talking about the S&P, NASDAQ, and all that. There is a little bit of demand. Talking S&P now, there's a couple different levels here. So if and when we get down to the 2670-ish, 2670 area in the S&P, and above that, well, no, that's the area. So 2670 down to about 2645. Expect some fresh demand to come in, to be in the market there. And then, of course, your next larger time frame demand zone is down at the February lows, the 2505. If you look at your 4-hour chart of the S&P, price came into a demand zone. We were looking at, if you remember last week, we were looking at these two demand zones on top of each other. The lower one is 27.0, about 27.10 to 27.20, and then there's another demand zone on top of that. So, prices came into that, and we're now seeing a nice bounce and rally off of that. And anybody able to jump into any the S&P there? And of course, we've had some some shorts from the level above. Remember last week we were talking about the Nasdaq, right? Quite a bit. We were spending a lot of time on the Nasdaq. And remember the kind of the big deal there was the lack of demand below current price, right? Okay. Okay. So that's the whole thing. It's this drop is due to a not so much the supply above, but more importantly the lack of demand below. And so, but now obviously we've come into some demand zones. You're going to see a bounce, but that bounce is likely to take you up to. Give me 1 second here. If we go to the, if you go to look at your 60-minute chart of the S&P, okay, what you're going to see is at the 28. You're going to want to watch 2838, right up in that 2840 area. Let me get another one for you here. Yeah, that's 2838, and you'll see that on your, um, you can look at your 30 or 60-minute chart. That's quite a bit higher from where we're at now. And then again, now remember that the profit zone to the downside is open up to 2710 in the S&P, right? Does that make sense? Okay. Yeah, it's all about now you've got wide profit zones. So you've got room up to 2838 in the S&P before you hit some supply. And it really comes in about 2840. And then a profit zone to the downside of about, at least 2710. Well, back down to yesterday's lows, right? We know that orders inside that range are primarily filled, which should make it very easy for price to, move through those areas. Okay. The Nasdaq supply zones are a little bit closer. So there you're looking right now. You're at about 7160 in the S&P, right around 7220. You're going to see there's some supply there. Okay, 7220. The more significant levels are going to be up around 7385. Again, that's 7385. But watch 7220. Very likely to see a bounce to, a move to prices stop rallying there and a bounce down from there. Now, if you do get up to 7220 and you do turn lower, we have some new demand around, let's call it 7085. Right, so watch for that. And so you're likely to see a pretty volatile day. Next, let's look at the Dow. Okay, if you look at the Dow weekly or daily, but it's very clear on the weekly. We came into a little bit of, they all came into the same demand zone yesterday, so we don't need to spend too much time on that. What's more important is where are we going from here? Your nearest significant supply zone in the S&P is up around 26,050. 26,050. So quite a bit higher from where we're at now. And then again, the profit zones are opened up to the downside, at least down to yesterday's lows, if not lower. Oil is one we focused on quite a bit the last time we were together. And I know last week everybody was so bullish oil, but remember, oil came right into our weekly supply zone. It's now turned nicely off that and headed lower. But I will say at the moment, oil, just today, earlier today, it hit that daily demand zone. If you trade oil, anybody watching oil, and again, it's just so what you want to focus on is that weekly supply down to that daily demand. And I believe we went over all these levels last week. So that's playing out, and that's a nice, $6 range. So that's a big range, big move for oil. And and again, I would really just be trading off of those. So it's oil futures. Of course, you can trade the ETF if you like. Okay, but yeah, I'm going off the oil futures charts. You can look at USO if you want to. All right. Let's go to gold. So gold has had a big move. Remember, we had our demand zone and we're very bullish from the 1185 area. Is anybody still holding that one? Bullish from the 1185. And again, that traded right through our white space where those orders are filled, and is now trading up in the 1220-ish area, 1223. What you want to watch for there is the daily chart of gold, and the daily chart, you don't have a significant supply until 1240. So if you're holding on to that long, you might want to consider since the supply comes in right around 1240, ideally a profit target somewhere just before that is ideal. So you're about 10 to 15 points away from a profit target like that. There are going to be little supply zones that come in before that, but that's where the big one is. All right. On the hourly chart, if you are long and holding to that target, you're going to see some demand zones coming in around 12.11 and then around 12.08. So that's 12.08 and then 12.11, which is not far below current price. It's about 10 to 12 points below current price. So the levels to pay attention to here again is the daily up at supply, and then pullbacks to your hourly demand zones around 12.11 and 12.08. Yeah, so we had a little challenge getting the charts up. I got a brand new supercomputer though, so we will be back to normal for good next week. Certainly, yeah, we can take a look at. We can talk natural gas. So natural gas had a nice level if you want to focus on your 4-hour chart there. Um, if we were again, we went over a couple of. Yeah, as long as you're if you're obviously if you're picking your quality fresh supply demand zones, then it all becomes it all becomes a matter of profit zone, right? Of profit zone. So that's how you would pick, and that's where you get all your risk reward. Obviously, ultimate risk and reward comes from your actual dollar risk to dollar reward based on position size and the size of your stop compared to the size of your target. So yeah, I'm always looking for at least 5 to 1, meaning I want the chart to offer me at least 5 to 1. Lately, obviously, we're finding plenty of 10 to 1 plus trades, but that's not out there all the time. In natural gas, we came off of we came down to our demand zone on the 4-hour. Just in the last few hours, we've rallied up to supply, and you can see that clearly on the 4-hour chart. And we're now trading off of that. So your near-term range in natural gas, okay, and let's call it, here we go, right there. I'll give you the numbers. So 3265 on the supply side, and then the demand zone is not fresh anymore, but down. You'll see it clearly on your 4-hour chart. Okay, so that is nat gas. Copper. We also went over copper the last time we were together. And that came off of anybody in our copper trade that bounced off our edge. And all you have to do is look at the daily chart. Came down to our daily demand zone, and that supply is quite a bit higher. So it's kind of like watching paint dry, but it's working out fine. Again, a slow mover. And the DAX. So we've been watching the DAX too, and the DAX almost hit target yesterday, did not. So we'll need one more push lower to get the DAX down there. We'll see if that can happen. Sure. We can look at the Russell. The supply zone in the Russell comes in around 1603. So watch 1603, and if you want to see that level, just go to your 60-minute chart. It should jump out at you there. Okay. On the downside, demand again is quite a bit lower. On the demand side, what I would do there is we went over S&P and NASDAQ demand zones. I would actually trade the Russell off of the S&P or even the Dow demand zones. You just don't have any that are that clear. So, but again, so the supply side is really clear, and that's like I said, I give you those prices. Just look at your 60-minute chart for that. Okay. And then as far as the dollar, so the dollar just in the last few hours has come off our demand zone on the 60-minute chart, and you're now seeing a little bit of a rally. You're likely to see a little bit of supply come in around 95.45. So we've been there before, so probably nothing significant. What you definitely want to keep your eye on, and I always keep this level on the chart, is looking at your weekly chart of the dollar. You'll see, and this is a level that we've gone over every time we're together here, that 96.90. Okay, call it 97 at this point. If that's more the fresh area, and plenty room to the downside there. Okay, but again, we are coming off a demand. The next area of, well, you've got multiple. If you make a new low for the week, for example, on the dollar, make sure you're aware. Just look at your 60-minute chart. You'll see a new low for the week will very likely be a bear trap in the dollar, meaning there are demand zones on the 60-minute chart just below where the lows of the week. So a new move there is you're likely to see a quick turn to the upside in the dollar, meaning just the opposite for any major FX markets against the dollar. Does that make sense? All right. Well, on that note, the market's about to open. I will turn it back over to Don here. But before I do that, I will pop my email address into the chat there. If you have any questions, I know the markets are really moving. If you're struggling with a position or not sure what to do, I check that email on a regular basis. I can also send you, if you, anyway, if you have any challenges, questions, just shoot me an email there and I'll try to help. On that note, we'll see you next week. And have a great weekend and have a great day.
Thank you very much, Sam, and thanks everyone for coming to the morning market briefing. We did a little radio show for you this morning, and we hope that was helpful in getting you into the marketplace today, arming you with information that you need to help be successful today. We hope that everyone recovers well from the week. If you were in challenging positions, that you were able to recover those from those challenges. At any rate, thank you again from everybody here at TradeStation. We look forward to seeing you next week, next Monday, for the morning market briefing. Thanks very much.